As we're diving in, I already said that this is more than just understanding some keys to the tax brackets and making the most of some new credits and deductions. It's more about you as an investor staying informed and working with your overall wealth plan and how taxes relate to that. So what we want to do now is really dive into some of those key details, and let's start with the basics. The Tax Cut and Jobs Act. And it was introduced in 2017, and it brought some sweeping changes to the tax code. Now, I've already talked about the fact in length that it's lowered the individual taxes, the corporate taxes, and also doubled the standard deduction, but it's also introduced new benefits like the qualified business income deduction for pass-through entities, with the Republicans likely sweeping not only the White House, but also both chambers of Congress. The financial landscape is really set for a big change, and what we're doing here at Lions Wealth is really keeping an eye on the tax planning side of things. And one question really stands out. What will happen to the Tax Cut and Jobs Act? Now, this is set to expire at the end of 2025, but this isn't just a policy question, it's a personal one. And whether you're a business owner, an investor, or you're actually planning or in retirement, there's a lot of potential changes that are to come that could actually affect your taxes, your income, and even your legacy. Now, this is where stakes can actually be pretty high, and what we want to do is actually help understand and look at ways we can prepare for possible changes. Now, yes, the Tax Cut and Jobs Act was introduced in 2017, and it did bring about some significant changes. So it lowered our tax brackets, it doubled the standard deductions, and it also expanded the child tax credits. But as this sunset date approaches, which is at the end of 25, we're really starting to watch what's going to come out of Washington with all of these pivotal moments and what happens next and how it can help redefine your overall wealth plan. Now, that's where the Republican trifecta is going to set a stage for many of these provisions to continue. But here's the thing, which ones are going to continue and which ones may change? We're taking a look at, say, the controversial SALT deduction cap. Is that going to remain, or could there be some changes to come? What about the estate tax exemptions, or even new proposals that may eliminate income tax on certain groups? See, all of these decisions are really going to be manifest on the political front and how they are treated and what that means to you. So when we take a look at this, we want to dive into all of these different elements and really figure out how we can be taking some proactive steps. So yes, it's more than just learning about and potentials, but now we need to take a look at the credits, the deductions, and ways we can be working with you, what that means for your overall wealth plan. So that's what we want to be talking about today. But before we do much of planning, we need to start with the basics. The Tax Cut and Jobs Act was introduced in 2017, and like I just said, it actually brought about some sweeping changes in the US tax code. What it specifically did was lower the individual and the corporate taxes. It doubled the standard deduction, and then it introduced some new benefits like the qualified business income deductions for pass-through entities. So think LLCs and S-corps. But the most good that it did was really undone with an expiration date, which was December 31st, 2025. Now, with a Republican trifecta then, right now, we could actually see some things change, and that may actually be extended with respect to the Tax Cut and Jobs Act. So yes, we don't know that right now because we don't even have a new presidency or Congress in any form yet in the White House or in Congress. So right now, things are staying the same. But what happens when we actually come to the inauguration date and Congress changes and the president changes? That is what we will be working on from here. So all of the different things from 2017, all the priorities that they had have actually shifted a little bit. And the promises now from the 2024 campaign from President Trump is going to be very ambitious. And all of these proposals for not only new tax cuts, but other things are really making it clear that we're going to be headed for an interesting period, especially with some negotiations with the Democrats. So what really remains then is that there's some things that are, well, going to be addressed and having to work through, and things may be unchanged for a while. Now, yes, right now there are 7 tax brackets that we have, and I do expect those to stay the same. The doubling of the standard deduction, which has significantly reduced taxable income for many, may actually be the same as well. But what we're likely to see is that the SALT deduction cap, and remember this is capped at $10,000 and state and local taxes. So think even property taxes, which is a huge element for many people and actually a flashpoint for both parties, maybe changed or even eliminated altogether. And what this would do is raise the cap possibly, or it could even leave it unchanged. I mean, this is where we don't know yet, but what we need to do is see how this plays out a little bit on that front and working with all the different states and their taxes. But like I said, what does this mean for you? Because right now we're just getting some theories, some ideas of what's coming up. But what will happen is that most likely that the Tax Cut and Jobs Act will persist. So some of the planning that we've been working on over the last number of years will actually be able to not only persist, but we can actually prolong, say if we're doing some Roth conversions or many other ways we are using the lower tax brackets to your benefit. So that's where this actually really comes into play, when we can adapt the laws that we already currently have and plan accordingly for the ones that are to come. Now we can really figure out how we can be working to your specific financial goals, your specific situation, and making sure that you have all the bases covered. So that's really kind of that introduction to what is out there, but I want to dive into a couple elements that we want to be talking about, really diving deeper into. And that first one is the SALT deductions. So the state and local taxes. Now, like I said, that this is capped right now at $10,000. And this is, again, for the state and local. So the deductions that you used to have now has been capped. So with the raising of the standard deduction, it capped what you could take. So it's harder to get above that with your different properties or taxes. And since this has been such a contentious issue with, say, New York, California, Illinois, Minnesota, and a couple other states with higher taxes, we can really be feeling the push it and the ways that we want to see this eliminated because of how it could affect negatively our taxes. So raising that is actually something that could be happening. Now, like I said before, there's even some thoughts of different thresholds or even eliminating it altogether. But what we really know now is that that's going to be open for debate, and there's going to be a lot of things that are coming out. But it's an itemized deduction versus a standard deduction type of a debate. And with the original Tax Cut and Jobs Act, President Trump wanted to make things simpler. So we'll figure that out as the time comes. But the next one, the child tax credit, is something that we saw during the pandemic, and the maximum credit temporarily increased to $3,600 per child. And what this did is offered a significant relief for families. But if we have a bipartisan support, we could actually reinstate those higher credits now that they have disappeared. So we can actually see this as a form of stimulus to you and to many others as part of their local economies being able to afford more goods and services. So this actually could very well be helpful for thousands of individuals to really help with the essentials that they need for living expenses. And that's why this actually may be a very good thing that will progress through. But then we have the alternative minimum tax. And this is also something that we've been looking very closely at. And most likely over the last couple of years, you have not had to worry about an AMT tax because we really reduced the percent of individuals that were subject to the tax. And now and again was trying to simplify things. But with proposed changes, that can actually be altered. And what Congress wants to do is lower that income threshold again. So what this would do is bring in some high-income households with substantial, those SALT deductions that we were talking about, back into play. And we could actually offset some losses that we're giving to other SALT cap, really raising that or eliminating that for certain individuals to be offset with an increased AMT. So there's a lot of different elements at play here. And what we want to do is really consider all of those elements. And then as a business owner, what those qualified business income deductions may do. And that's the section 199A. So I've been very technical. I've been walking through all of this as part of just thought processes here. Because whether we're taking the SALT deductions, whether we're taking the QBI, the qualified business deductions for that 20% deduction of your income, all of this means something. And with the reduction of corporate taxes, with the reduction of some of these things, there's a lot that President Trump's agenda is going to want to either progress, pursue, or even eliminate altogether. So there's still a lot of ambiguity with respect to these tax cuts. And that's really what we want to do here, is look at the differences between, say, you as an individual and what it means to your taxes, or if we have corporate taxes that you're going to be filing, what that means for a pass-through entity before it gets to your income. And all of that is is really to say that we need to take a look at what's coming out and be flexible with your planning. That is the number one element here, is that when we know about what's to come, that we can adjust, adapt, and have that flexibility in moving forward. Now, the overall goal then is to still help minimize your overall taxes while maximizing what it means to you, your family, and the financial growth in the future. Well, if you are really at that stage that you're looking into all these things, whether it's wealth planning, estate planning, and all the different tax cuts that are out there, we really want to be focused on what that means for you. And as you have questions, we would love to sit down with you. First of all, like this video so that others may find it, and then share the video as well so that they can understand some of the ways that there's changes that may be coming with your own wealth and their own wealth. And then as you have questions, feel free to set a meeting with us, and we'd be happy to go through some of the new elements that we're seeing and put a plan in place for the future. Take care.